Hey everybody, this is Gunjan from the weekly roundup, and you're listening to the Startup Operator podcast. It's what India's leading show where we talk about the greatest developments from the Indian startup ecosystem. Today, Roshan and I will be talking the storm that went on into the Indian startup public market in the last week, and also how the ecosystem has been strongly maintaining its momentum of growth. And Roshan, this has been a really short week with Republic Day on Wednesday, and of course that led to Thursday feeling actually like a Monday. But how was the week for you?
Week has been rather busy, actually. A lot of things have been happening, nationally as well as work-wise, right? We had the Padma Awards, obviously, and more than a couple of great awardees, I would say, right? Rightfully so, the vaccine makers Krishna and Suchitra Ella of Bharat Biotech got the award, and also Dr. Cyrus Poonawalla of Serum Institute. And really, I think it's a nice way of recognizing all of the work that has gone into a fantastic vaccination drive, right? I mean, more than 150 crore vaccinations in about a year's time. And I think all of us owe a debt of gratitude to them. There were also a couple of surprise nominations, I should say. Sundar Pichai and Satya Nadella. Although, I mean, deservedly, I think, two of the best CEOs around and of companies that are probably among the top 5 best known companies in the world right now, right? Microsoft and Alphabet. And also what they've done, right? I mean, putting Indian tech on the map in some sense. So yeah, I mean, definitely a great thing. Last year, in fact, I think Sanjeev Bikhchandani was one of the awardees as well, right? So this year we had Mr. N. Chandrasekharan, who's the chairman of Tata Sons, getting the award. And incidentally, last week, the Air India merger was complete, right? So after 60 plus years, finally Air India returns to Tata, and I'm quite excited about what happens on that front. Did you watch the Republic Day parade, Gunjan?
I was taken ill and just couldn't get up.
Yeah, so the
So what were
Republic
the
Day
highlights
parade
of it?
was, yeah, I
Oh
mean, I
wait,
wasn't.
I did see some videos where there was a metaverse presentation. So how much did that annoy you?
No, man. I mean, not the metaverse again, but yeah, I really like the drones display, and I read a bit more about that. It's apparently by the startup, IIT Delhi startup called BotLab Dynamics, right? You saw those drones flying in a very coordinated fashion, right? And apparently, India is the fourth country in the world to have developed such a technology indigenously. And we've spoken about how useful drones can be going into the future, right? Not just from a national security perspective, but also from a logistics last mile perspective as well. And it's amazing that we're building all of this indigenous technology ourselves, right? So for folks, I mean, if you guys are interested to understand more about that, do check out the episode we did with Vipul Singh of RA One Man Systems. Very, very comprehensive deep dive on the drone industry and what it takes to ship in that space. Overall, very busy week, I would say, even with the days holiday in between.
Yeah. And also, incidentally, today, exactly 7 years back, on the same day, the first patent for drone was, published in US. So I mean, we have really come a long way. We saw Amazon trying to, work on its same-day delivery with drones, but that scope has itself broadened up so much. Even the government, giving some serious incentives to the ecosystem to make developments in this space.
Yeah, absolutely.
Okay, let's talk about the stock market. I mean, I really did kind of saw a huge dip in the portfolio, but it's almost like it's a bearish season for the Indian startup ecosystem. Valuations of many leading tech companies have been cut to the size by stock markets, and that includes the likes of Nykaa, Zomato, Paytm, Policy Bazaar. All of these companies are trading way below their listing prices. In just the last 5 days, shares have fallen anywhere between 10 to 30%, and from the listing highs, as much as 50% for some of the companies. But if you compare it with other stock markets in the world, right, this correction is in sync with the US tech industry, where stocks of Apple, Microsoft, Tesla, Facebook have also fallen drastically. One of the companies that have taken a really serious hit is Zomato, that has been trading around 27% lower than its listed price, right? And Paytm has been on a continuous downslide, which has been trading at 900 rupees, which is almost 50% lower than the listing price. Now, hopefully, with the upcoming union budget announcement next week, we might see some boost in momentum. But I think this entire market feedback will also force a lot of investors to rethink their portfolio. And for founders itself, it would be more like relying more on hard numbers to create valuations for their fundraise and public listings. In the last roundup as well, we spoke about this correction, right? What do you think?
Yeah, by the way, Paytm issue price was 2,150, right? And they're right now trading at 900, listed at 16 billion right now. I mean, less than half of what that valuation is, right? I mean, which is pretty crazy if you think about it. See, the good times don't continue indefinitely. And there's that saying, right? I mean, nothing is as good or as bad as it seems. And that's certainly true. I mean, I mentioned this last roundup as well. I mean, there's definitely reason for caution, but I don't think people should panic yet. Right. And look, the US market is bound to have an impact on us as well, right? I mean, when the US catches a cold, when the US sneezes, we also catch a cold. That's how it is, right? So there you've seen pretty steep correction, right? And we've been holding pretty steady actually. If you look at the large financial institutions, foreign institutions, they've been selling since last August, September time. And still, we have not really corrected so violently, right? I mean, as we would have maybe, perhaps earlier. But I would only say that, look, I mean, if you believe in a business, then what happens in a quarter or 2 quarters doesn't really matter, right? Now is the time to go back to fundamentals and really, choose companies and businesses based on those fundamentals, right? I mean, do you see this being a decadal or a generational business, right? Um, Otherwise, I mean, it's going to be difficult, right? Because you don't know which way the market is going to go, up, down, or sideways. So yeah, I mean, and obviously all of this public market caution, panic, etc., will have an impact on the private market valuations as well, which have, as we have mentioned earlier, which have been crazy, right? And we'll talk about a few of those instances in this roundup as well. This is long due. I mean, it's something that people have been expecting for a while, and it's finally happened.
Well, yeah, but as a result, companies are also pushing their, IPO dates. For instance, Delivery may delay its IPO by a few weeks against this market volatility. But at the same time, this delay could also be, seen as something to avoid a clash with the LIC IPO, which will be happening in around the first week of March. The LIC IPO is supposedly going to be India's biggest IPO till date, with the government looking to raise up to 1 lakh crore rupees by selling shares. And Delivery, on the other hand, is seeking to raise $1 billion at a valuation of around 6 billion. Now, this kind of reminds me of the times when, Bollywood directors used to, figure out release dates so as to not clash with another movie with a huge star cast. Kind of something like, okay, if it's Eid, then it's a Salman Khan movie coming out. If it's some other festival, some other actor. Something similar playing out in the public market as well.
Yeah, so see, it's not the best time to listen to markets at this point of time, right? And that's a understatement of the nth order, right? Because I think post Paytm, everyone has kind of pulled back, whether it's MobiKwik or Delivery, or I won't even speak about Ola because they had plans of sometime in the future, right? And I don't think that will even figure in the scheme of things at this point of time. But there was an interesting interview of Ashneer Grover, of Bharat Pay, I mean, who has been in the news for all the wrong reasons of late. But there was an interesting interview, nevertheless, post the Paytm listing, right, where he said that, look, I mean, you did an 18,000 crore IPO, out of which 55% was secondary. And you basically, what he was saying is that that it was priced very badly. And also, I mean, they didn't estimate that the market will be they didn't estimate that the market will be smarter than this, right? I mean, and at that time he had mentioned that there will be a pre-Paytm and a post-Paytm for the IPO markets, and that's exactly what's happened, right? So if you look at it, MobiKwik is looking to raise 1,500 crores, right? And Farm Easy, which was also looking to, which has also filed an IPO, DHRP, I think, is looking to raise 6 or 7,000 crores, and neither of them are in any hurry to raise in this kind of economic situation, right? Or rather, market situation. Because that's just it. I mean, the investors are also like fairly cautious, especially after the stocks have corrected 30 to 50%. So yeah, I mean, it's pretty sad. All of them have fallen, right? Nykaa is down to, I think, 1600 levels right now. Policy
13%
Bazaar has
below
fallen.
listing.
Yeah. But although I do feel that Nykaa is a great business, right? It only matters what price you buy it. But I think long term, I mean, these are some of these businesses are definitely strong and robust. Zomato was at 90 something. I mean, the last time I checked, right? So yeah, I mean, and also, I mean, coincidentally at the same time, Swiggy raised a bunch of cash as well, right, and became a decacorn. So yeah, I mean, interesting times ahead. Everyone's exercising some caution. I really hope that in about a couple of months' time, 2 or 3 months' time, I mean, we're back to some reasonable optimism, I would say, and that these companies list, right? And especially, I mean, I hope that the LIC IPO doesn't screw up, right? Because that has been in the making for a long time, and that's an important move, like a very, very, very important move. And I just hope that we don't screw up that. I mean, so let's hope good times return.
So you mentioned about Swiggy being a decacorn, right? So that's kind of signaling that still the effects of the what's happening in the public market has not being seen as readily in the private markets, in the venture capital space. Yeah, Swiggy raised 700 million in a funding round that was led by Invesco, and currently the company is valued at $10.7 billion. So with that, it joins the small but a very elite club comprising of Flipkart, Byju's, and Paytm. And Swiggy today has become the second most valuable privately held startup, second only to Byju's. Now, it will be using this fundraise to accelerate its growth of its core platform and also to make a lot of investments to scale up Instamart. If you look at the business which Instamart is bringing to Swiggy, in the last 17 months, its GMV, which is the gross merchandise value, uh, it's overshot what it was for the food business. I mean, to reach the same levels as Instamart, Swiggy took around 40 months for its food business to reach that level. Now, of course, a lot of push has been given with the hype around quick commerce, right? And very soon we might see food delivery may not be Swiggy's core business at all. So, what do you make of this?
Food is the trickiest use case for logistics, right? Because obviously there's a very, very finite shelf life, and there's a lot of complexity involved. Really feel that they will expand way beyond that, right? At least, I mean, at the valuations they're commanding, the story is a lot larger than food, right? And really, the funda is about two things, right? Average order value and the amount of repeat purchases a particular user does, or lifetime value in some sense. And they have to figure ways and means to improve both of these, over a period of time, right? And yeah, I mean, so they're in 500 cities right now. They plan to add another 100 more. And so the good thing is that last mile in India will get made by these kind of innovations, right? And we've seen that there's just plenty of headroom for growth, right? The food ordering space itself, it's going to be a duopoly between Zomato and Swiggy, more or less. And post pandemic, I mean, there's been a lot of changes in terms of restaurant business itself. I mean, I don't think anybody will think twice about cloud kitchens so much right now, right? Because cloud kitchens have done exceedingly well, and it's been kind of an asymmetric sort of a impact, right? I mean, due to COVID, some of the large pubs and bars have been very badly hit, and I doubt they will ever come back to normal working business again. But cloud kitchens have done really well, right? Yeah. So some kind of demand aggregation on the cloud, right? Marketing on the cloud with just delivery is the way forward for a lot of businesses in the restaurant space. And Swiggy will be a key part of that. I mean, they're targeting about 500 million users in the next 10 years, right? And you're going to see plenty of other people come on the internet as well, right? I mean, estimated by around 2025, we're going to have 900 million internet users. And all of these folks, I mean, will experience all of the convenience that we have been experiencing for a while, right, on the internet. And let's see what happens.
See, a lot of people do compare Swiggy and Zomato head on head to head, right? But just in terms of valuation, Swiggy's valuation is higher than Zomato right now. And if you look at the entire growth stories of both these companies, Zomato started off as a restaurant listing business, then pivoted to deliveries, and then to what is now Zomato Pro. But Swiggy, on the other hand, has been aggressively diversifying its portfolio. We had the food delivery business, then they moved on to Instamart, from Instamart to Genie. Right, Genie is the Dunzo equivalent of Swiggy. And yeah, now they're moving into Swiggy One, which is very similar to Zomato's Pro program. So how do you see this competition going out, the two
Well,
different tactics taken by these companies?
Zomato has also like fairly, I mean, it's also fairly diversified, right? Yeah, so they recently set up an NBFC, in fact, I mean, and acquired a minority stake in Urban Piper and add on more and so on, right? So, yeah, I mean, they will have to diversify, man, and they will have to sort of be bigger than the food business because of the kind of valuations that they're getting and seeking also, right? So, private markets are always a little more optimistic than public, right? Public on average, I mean, it will rationalize. So, which is why, I mean, you're seeing the difference also. And the kind of battering that the Zomato stock has received over the last, last month or so, last week or so, especially, right? So yeah, I mean, it's just the nature of private and public markets, I would say, right? So, but neither can stay optimistic for a long amount of time without any kind of delivery, right? So Swiggy will have to start, like, working towards, fulfilling some of those promises that they've made to investors.
Let's talk about Ola Electric. They raised $200 million in a new financing round. Techne Private Ventures, Alpine Opportunity Fund, and Edelweiss were among those that financed the new round, which values Ola Electric at $5 billion today. The company was last valued at $3 billion in September 2021, when it raised $200 million from SoftBank and Falcon Age. Now, a few analysts at UBS, they recently put out a report last week in which they estimate that 37% of all two-wheelers in India will be powered by electric by the end of the decade. Now, this entire electric space has also been, it's been really hot. Bounce had unveiled its own electric scooter that, many motor enthusiasts claim to pack more power than what Ola is offering. But today, that's more of an untested claim because Ola has delayed the shipment of its two-wheelers multiple times. And at best, only a tiny fraction of customer base that had pre-ordered the vehicle have received it. Now, Roshan, I know you are a fan of bikes. So maybe in the next couple of years, are you planning to get an electric two-wheeler?
I am on a wait and watch mode right now, right? Let them work out all the bugs, and let after that, I mean, I would definitely probably look at Ether, right? I think that is who I have my money on for sure. And look, this is an expensive business. I mean, it's early in the innovation curve. They have to build a lot of things, build or acquire a lot of things in a full stack fashion. So they definitely need more and more money, right? But Ola has had some significant problems with the delivery. I mean, they claim to have dispatched around 4,000 scooters, but only 275 to 300 vehicles have been delivered according to the vehicle registration data on the Road Transport Ministry website, right? And if you look at it, I mean, they had 90,000 bookings, right? At least on the books, it says that, right? I mean, through the pre-orders and everything. Now, I don't know what the plan is to start delivering these, right? I think they started delivering only in December 15th. So it's definitely steep, and it's they have some other challenges also. I mean, I was just looking at some of the user reviews by people and so on, right? A lot of people have complained about the true range, for example. So Ola promised 180 kilometers range, but is only offering around 100, right? And some of the features are not available at this point of time: Bluetooth connectivity, cruise control, proximity lock, voice control, hill hold, mood widgets, and so on and so forth. People have been told to wait for another 6 months for a software release on that front. And they also upgraded a bunch of these S1 folks to S1 Pro. But then they only have the hardware. They won't get the supporting software, for which they have to pay additional, right? I mean, it could have been a smart move, but all of this put together, right? I mean, it doesn't inspire a lot of confidence. And Bhavish posted the picture of this very swanky very futuristic car on Twitter, right? And hinting at the fact that Ola will perhaps start manufacturing cars. And Hormaz, the Sorabji, who's the editor of Autocar India, had said, you first fix your scooter business and then talk about cars. They're a different ball game altogether. To which Bhavesh had posted a picture of Bernal, right, saying that petrol mafia or something like that. I mean, all of this is like really absurd. It's like Sasta Elon behavior, right? And I really am rooting for them to fix their shit and for people to experience the capability of EV, man, because I feel like we should not sully the market through all of this nonsense, and I'm really hoping that Ola will be able to deliver on its promise. So, yeah.
Yeah. Yeah, and this will be a very fundamental shift, right? I mean, if you look at when Ola announced its S1 program, the number of registrations that people registered was actually higher than the entire number of tools sold in that period. I think we discussed this in one of our rounds. But all of this progress is getting mired into what you call the Sasa Elon behavior, right? If you're not delivering to the actual public, then it's just again something that's just playing out on the papers. So yeah, hopefully we'll see some improvement over here. Cool. Let's talk about unicorns. India's unicorn rally has maintained its excellent pace, with two more startups crossing the 1 billion valuation mark last week. Social commerce startup Dealshare's valuation shot up to $1.6 billion with the latest funding round. It raised 130 million, which was led by Tiger Global and AlphaWave Global. This is also a tenfold expansion in the logistics infrastructure, and they'll also be targeting and increasing their geographic reach. In addition to that, it will also be establishing a lot of offline store franchises in its network. Darwinbox is the second unicorn of the week, having raised $72 million in a fresh funding round. The Series D round into the HR tech startup was led by Technology Crossover Ventures, or TCV, which is known for backing companies such as Netflix, Spotify, and Meta earlier. Darwinbox is also part of a cohort of startups that are building from Asia for the world. Companies like Tokopedia, Swiggy, and Starbucks use the startups platform to handle onboarding of new hires, gaining visibility on their performance, attrition rates, and so on. Now, Roshan, I remember you had spoken to Jayant of Darwinbox earlier, right?
Yeah. Yeah, so Darwinbox is an interesting business for sure. I mean, by the way, I mean, we have spoken a fair bit about Dealshare and social commerce and stuff. We will link that particular episode in the link, in the podcast description. Do check it out if you'd like to understand more about that space. It's very interesting. So Darwinbox is, they're in this cloud human capital management space, right? Which was, I mean, earlier, I think a lot of people used to call it HRMS, HR management systems, right? And they're part of the Gartner Magic Quadrant for Cloud HCM also, which is actually a big achievement for a startup for sure, right? What I found really amazing was the fact that, Darwinbox did about 49 crore revenue in FY22, right? Which is around the 7 million ARR mark. And they project to become around 15 million this year, right? FY23. So the valuation that they've gotten, which is at $1 billion, is 65 times on like their forward projected revenues, right? So let me repeat that again. They've got a valuation of 65 times, more than 65 times their forward projected revenues, right? Now that is an insane multiple. That's an insane multiple, especially, given how the markets have behaved right now, right? With the corrections in India and the US. In this kind of a scenario, to get that kind of multiple, I don't know. I mean, it's crazy, right? It's pretty insane, right? So Darwinbox, they have a lot of good enterprise clients: JSW, Adani, Vedanta, Tata, DLF, and also they're one of those folks who have done the Southeast Asia journey very well as well. They have some large clients in Indonesia, Vietnam, Philippines as well, right? And post-pandemic, these kind of solutions around workforce management and so on have really become, very important, right? And also, I mean, we've seen how rapidly large enterprises have taken to cloud post the pandemic. So all of that put together, I think it's a great story, and which is why you're seeing that sort of a multiple, right? So and great set of founders as well, Chaitanya Peddi, Jayant Paleti, and Rohit Chennamani. So all the best to the Darwinbox team, and rooting for them as a fellow SaaS enthusiast.
Right. Even with pandemic, even the entire B2B e-commerce space has really seen a huge uptake. Moglix recently backed $250 million in a Series F round, which led its valuation jump almost 2.5 times in less than a year to $2.6 billion. The round was led again by Alpha Wave Global and Tiger Global. Earlier in 2021, I think around May, Moglix became the first B2B commerce unicorn in the manufacturing sector after having raised $120 million. And today, Moglix is the largest e-commerce platform for industrial goods in India with close to 700,000 plus SKUs on its platform. What do you make of this? Do you think like, of course, B2B e-commerce has been an enabler for a lot of industries in the country, but how do you see this spanning forward?
Oh, for sure. I mean, we've spoken plenty about B2B commerce. We've had, the founders of Off Business and Zwork on the podcast as well earlier, right? People do check out those episodes and the roundup as well. We'll link it in the description. There's plenty of things happening on that front, right? Right from procurement to financing to platform, software, everything. Like these startups are solving multiple different axes, right? And it's only going to become more relevant as India gains in manufacturing, right? I mean, we've seen the PLIs that have been announced, for example, right? And there are expected to be other kind of SOPs and support for this industry specifically, because I mean it's a workforce intensive industry as well. It's going to ensure employment, jobs, and so on, which the government really supports, right? So yeah, I mean, it's just going to gain in prominence for sure. Yeah.
If you look at the entire B2B e-commerce space, right, most of the players in this market space can be divided into 3 or 4 categories. There are a few who are focusing on a lot of multi-product categories or sectors, while many are specializing in just 1 or 2 sectors. So for example, you have the likes of Udan and Bizongo who are serving multiple sectors at once. But companies like Intramarket, Medica Bazaar, they're focusing on,
Yeah.
building and construction materials and medical and healthcare goods, respectively. Moglis, on the
Yeah.
other hand, is on industrial products, and Zwork is into heavy India manufacturing. So
Yeah.
you can already see there's a lot of diversification going on here.
Yeah, no, and especially with Medika Bazaar and Muglix and everything, right? I mean, these are specialized machines, very high costs, limited supply, multiple people in the value chain, and so on, right? And servicing is such a pain. So I mean, this is like a perfect industry for for tech to streamline, and that is what these startups are doing.
Right. Okay, so in a growing trend of entrepreneurs, that turn into venture capitalists, fintech veterans, Pine Labs CEO Amrish Rao and Neobank Jupiter's co-founder Jitendra Gupta have joined angel investor Shweta Rao to launch White Venture Capital with a corpus of $40 million. The fund will specialize in backing early stage fintech startups in India and Southeast Asia, but 30% of the fund will also be open for investments in non-fintech startups too. Now, this trio has been actively angel investing since 2016 and have a portfolio of over 100 companies, including Cred, Open, Dunzo, and Mobile Premier League. They have backed at least 8 startups that are now valued at more than $500 million. And many other, founders have turned into investors recently. We saw Freshworks CEO Girish Mathrubootham recently launching the Together Fund to back SaaS startups. Dream Sports co-founder Harsh Jain is also setting up his fund to back early-stage startups operating in the sports arena. And Udan co-founder Sujit Kumar and Flipkart Group CEO Kalyan Krishnamurthy are limited partners to Tanglin Venture Partners. Now, of course, one of the things that will need to be figured out whether the funding momentum will continue in the coming months, given the background of the correction in the stock markets and its impact that we might soon see. But Sequoia recently announced its 6th cohort, right? Did you have a look at the list yet?
No, I haven't seen the list yet, but man, Surge has become like a cult in the Indian startup ecosystem, right? I mean, they definitely got this right. If you look at the kind of startups that have come out of it, Atlan, Scaler, Class Plus, Khatha Book, I mean, all of them have done exceedingly well. right? And Sequoia has done a fantastic job of sort of promoting this program, and also like really helping entrepreneurs scale, right? So yeah, I mean, the other facet about this is that the Indian startups work with their Southeast Asian um, you know um, other Southeast Asian founders as well, right? So they have a wider perspective of things, and they can launch globally as well. So yeah, I mean, fantastic achievement by Sequoia for sure.
Yeah. So, for those who might not be aware of it, Surge is Sequoia India's rapid scale up and mentorship program for startups. And with the sixth cohort, they have invested around $60 million from startups from India and Southeast Asia. Uh, yeah, I mean, as you mentioned, there are a lot of notable companies that have come out of it, and maybe we'll see more this year, latest cohort.
Yep.
Let's talk about the conversations you've had with the folks last week. You spoke with Ezil Subian of String Bio and Arjun Nair of Great Learning, right? What did you enjoy most about those conversations?
Well, both were amazing conversations, right? So Great Learning got recently acquired by Baiju for about $600 million, I think, right? And they were completely bootstrapped. Maybe just some small investments along the way, but nothing like the kind of funding that we've seen for edtech startups in the last 1 or 2 years, right? And yeah, I mean, they also started up during a different era. 2012, 2013 was when Coursera and Udemy and Khan Academy and those folks had just about come up on the scene, right? I mean, and really convincing Indians who value education so much, right? Institutions and so on, so much, to look at online learning itself was a revolutionary idea at that time. And it's folks like Great Learning who have kind of caused the change that we're seeing right now, where edtech has become front and central, right? So it was a fantastic episode, talking to Arjun about various facets of edtech and how they caused that change to happen, how they shifted that mindset, and how he sees the future of education in India, right? Um, Elil is the CEO of String Bio, and they're doing some fantastic work, and very inspiring story as well. So she was working in the Silicon Valley, and then she returned to India to start up this company, and they synthesize proteins from methane, basically. And this is a very sustainable sort of a process, and their element, basically the substance, feeds into multiple different industries, right? Agriculture, food, manufacturing, and so on. So again, we don't have a lot of deep tech and core science founders on the podcast. So it was really nice understanding, what it takes to ship in that space, because, iteration cycles are longer. It's harder to attract capital. And so, yeah, I mean, two wonderful podcasts coming up this week. Do definitely check them out.
Right. Looking forward to that. With that, we also come to the end of the 56th roundup. Thanks everyone for listening to the podcast. We hope you really enjoyed a deep dive into all the action that went down last week. If you're keen to know more about what's happening in the Indian startup ecosystem and to keep updated on our upcoming episodes, do check us out on a social media platform. On Twitter, we are at Operator Startup, and on LinkedIn, we are the Startup Operator. Don't forget to also subscribe to our WhatsApp newsletter, where we send in quick bites on the episodes and what's happening behind the scenes. And until then, do share the episode with your friends and network. And yeah, thanks for this episode, folks. We'll see you again next time.
Thanks.